I went back to look at these same periods in the election years and all of this. Basically, the market goes bananas all the way until it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in.
Real Vision founder and CEO Raoul has very high expectations for the cryptocurrency and digital assets space. Pal, the proponent of the popular Banana Zone meme, recently shared beliefs that the 2024 and 2025 crypto bull market will have similar characteristics to the 2016/2017 blow-off top cycle, rather than the stunted bull run of 2021. A blow-off top is a sharp and dramatic rise in crypto asset prices. It is typically characterized by extreme euphoria, speculation, and a wild mania phase that has investors taking a lot of risks. The 2017 cryptocurrency bull run is considered a blow-off top due to its rapid and euphoric rise. Bitcoin's price surged from around $1,000 in early 2017 to nearly $20,000 by December, representing a nearly 20-fold increase. Other cryptocurrencies also experienced similar explosive growth, with the total market cap of cryptocurrencies skyrocketing. In contrast, the 2021 bull run is considered stunted because, despite significant price increases and widespread market excitement, there were some limiting factors, including the Chinese mining ban, regulatory pressure in the United States, and a rise in concerns about the environmental impact of Bitcoin mining. These led to sharp corrections and price fluctuations that generally stunted the cycle. Fortunately, many of these concerns have been laid to rest. While China has not officially lifted its cryptocurrency mining ban, experts and analysts have noted a subtle shift in rhetoric, indicating that China acknowledges the global economic significance of cryptocurrencies. In addition, the US has just elected its first pro-crypto president, and prominent investors like Pal are certain that only great days lie ahead for the cryptocurrency market. In a recent discussion with Rect Mando and OSF, co-founders of Canary Labs on the Real Vision YouTube channel, Pal delves into his expectations for the rest of the bull market, highlighting how long he expects the bull run to last and why this will be a blow-off top cycle instead of a stunted one like the 2021 cycle. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support, and enjoy the video.
Yeah, I mean, look, seasonally it happens. Almost whoever wins the election, using the everything code cycle, we're in the peak kind of debt refi cycle, so you need liquidity to come in. I actually did the maths in Global Macro Investor over the weekend. China's added $8 trillion of liquidity via both state sector and via M2. I mean, people don't realize. So liquidity is back. Everything was in place. And then we've got this other thing, which we'll talk about how the cycle plays out. But we've taken the big overhang off, which is like who's allowed to do what. And, that is a big deal. And there has to be a re-rating, not just on liquidity, but a potential re-rating of the sector. So it's a big deal.
How long do you think it takes for that to show through in markets? Like, is there like a lag time?
Well, I don't know because, traditional markets, they tend to sort of forward price it as soon as it gets the news. Then you get, a corrective period. But because the flows won't come until the new year, right? And we don't even have a new government in. So really the flows don't come until later because you actually need to see the regulators. It's not like Goldman Sachs can go, oh, great, Trump's in. We're all free to do what we want. They won't. They will have to wait until we're given new regulation, etc. So it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in. Every time we get to this point in the cycle, Bitcoin dominance collapses. Risk-taking, and now with the new government, risk-taking is going to be rising. Also, the other thing that I found the main driver of alts versus Bitcoin, so i.e. the inverse of dominance, is actually driven by the ISM survey. Business cycle makes sense, because if the business cycle starts going more positive because it's been very lackluster, what we tend to find is that risk-taking increases because people's disposable income goes up, their businesses earn a bit more money, everybody feels a little bit better. And that drives the same as small caps versus large cap outperformance. It's basically the same trade. You see it in credit markets as well. It's all the same trade. So it's perfectly set up for that now. All of our forward-looking indicators suggest that the ISM from here starts climbing above 50. 50 is the really big signal for the alt scene. Also, if we go back to 2020, it was exactly this time that ETH started properly outperforming. It's again the same point in the cycle. And if you play through, and I wrote a thread on this yesterday, is ETH is where institutions will build, whether it's on layer ones or layer twos, but that's where DeFi is. That's where institutions are not going to get fired for. It's the kind of Microsoft of the space. So I do think as regulation frees up, ETH is going to get a lot more activity people yet understand. So I think it's a good thing. And they've built it for scale. But the layer twos, if there's not much activity going on, then the price doesn't do well. But if you can start bringing the financial institutions onto this space, ETH is the most likely candidate for it.
First, Bitcoin takes off, then altcoin season begins, and all hell breaks loose with Memecoins entering a mania phase, followed by other digital assets like NFTs. Though Bitcoin has repeatedly notched new all-time highs this week, altcoins Solana, Cardano, Avalanche, and Sui are stealing the show. Cardano is up by over 80% in the past week, and Sui by about 60%. Pal believes Memecoins are next, with Dogecoin already leading the pack. A recent tweet from the Real Vision CEO reads, "We are very close to being in the last chance to add zone in crypto. The next step should be the memes breaking out, and after that, there is nothing to do but wait to take lifestyle chips off the table. Here is Dogecoin leading the breakout. Here is WIF about to break out. And smoking chickenfish will follow suit." In a follow-up tweet, Pal adds, "Many memes will absolutely explode in this cycle. I am not a meme trader. I have little alpha here, but please don't go over your ski tips in meme risk. Less than 10% of your portfolio. I don't want you to f this up." Another huge indication of the bull run and what's coming is the performance of crypto-related stocks like Coinbase and MicroStrategy this week. Here is a tweet from Bloomberg ETF analyst Eric Balchunas about the insane performance of both stocks. Bitcoin mania is taking over the stock market too, as Coinbase and MicroStrategy are both in the top 5 most traded stocks today, something I've never seen. Only Tesla and Nvidia have higher trading volumes. Both are up an absurd 18% today. Feels like a craze, at least for the moment. Let's return to Pal's conversation with Mando and OSF as they discuss Coinbase, altcoin season, and how long the bull run will last.
I put Coinbase as a trade idea. I mean, it's already been it's up 240% in our GMI portfolio and our Macro Insiders portfolio. But I put it on the Real Vision platform yesterday or day before yesterday because it's so obvious.
Yeah.
Right? It's the toll keeper to all activity for anybody in the largest economy in the world. If you just scroll down, Arthur, there, just show the chart. The chart is, I know, Ove, you're not a chart guy, but that's a gigantic inverted head and shoulders. This is going to La La Land squared.
Yeah, I agree. Like this is the thing that I am bullish on ETH as an ecosystem. What I found difficult is just that ETH itself, just because of the changes that were made earlier this year, just like you need massive scale for that burn to come back. Whereas Coinbase, you're going to see every major US institution pick Coinbase as either a custody partner or to tokenize on base. Right?
There's somewhere between BlackRock and JP Morgan. That's the position of power they have in this new emerging economy. I mean, what a position to be in. So it's currently a $66 billion market. I think this bull market, the whole space will end up being 10 to 15 trillion. So how much is Coinbase worth in that? I mean, it would not surprise me if Coinbase was worth $500 billion.
Yeah. That's crazy. That's $66 billion.
It's insane. It's so cheap.
Mental, isn't it?
Yeah, considering the size of the market that's already there, it's a $2.5 trillion market now. So if the market goes 5x, this probably goes 10x.
Yeah.
Feels, but that doesn't sound stupid. So I mean, that's a hell of a trade for people. People don't want to trade the cryptocurrencies themselves. I went back to look at these same periods in the election years and all of this. Basically, the market goes bananas all the way until, and then somewhere March, April, there's tax season, and everyone's going to have to pay Uncle Sam and Her Majesty or His Majesty, and they have to start selling a bunch of stuff. That seems to happen every time where you get that a pullback, and then it's going to depend on global liquidity. If it's still strong, then we end up with a strong pump into the end of the year. If not, we kind of get something more like last time. But yeah, I mean, I'm just think it's banana zone all the way through till March.
Pal is predicting a continuation of the banana zone till at least tax season in March. Then a brief cooling off period before prices pick up sharply again. However, he counsels us to be cautious so we can make the best of the immense opportunity we've been presented with. Another tweet from him reads, "The banana zone is that crucial phase where numbers go up and the best move is often to do nothing. If you've already made your core allocations, Bitcoin, Ethereum, Solana, you're set. Got a bit more appetite for risk? Sure, play around with newer chains like Sui or even some Memecoins. But here's the key. Keep 90% of your stack in solid, top-tier assets. That's your safety net. The real danger? Overtrading, chasing breakouts, or using leverage. This is where portfolios implode. We have one job, to protect our coins. Don't get reckless in DeFi, don't hand over your assets, and save that speculative energy for the 10%. Feed your inner degen, but do it smartly." Please share your thoughts on Raoul Pal's predictions for Bitcoin, Ethereum, and other cryptocurrencies in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for watching.